morning, everyone. My name is Timothy, and I'm from Uganda. And I work with Mercycorp Ventures, which is the impact investing arm of Mercycorp, which is a global nonprofit operating in more than 40 countries across the world. And today I'm here to share more about what we've learned from running more than 15 pilots across emerging markets. So I lead the crypto venture lab at Mercycorp Ventures, and I'll just give you a quick intro of Mercycorp Ventures. So we, like I said, we are the impact investing arm of Mercycorp, and to date we've supported over 50 startups that have gone on to raise over $500 million. And our thesis is centered around increasing the financial resilience and climate resilience of people in emerging markets. So in terms of what I hope to cover today, one is about the Crypto for Good Fund, which is an initiative by Mercycorp Ventures, and two is an overview of what we've seen in the Web3 ecosystem in emerging markets. And then three, I hope to provide you 3 deep dives on a few pilots that we've run as part of the Crypto for Good Fund. So I guess quickly about the Crypto for Good Fund, I guess a good place to start is the context that led us to launch the Crypto for Good Fund. And there's 2 important things to note. Web3 hype hasn't matched reality. There's always been, everyone is aware of the promise of blockchains, but as we stand here today, much of that hasn't been felt, especially in emerging markets. We still have billions of people who are financially excluded, over 1.7 billion adults, and nearly 60% of these happen to be women. And at the same time, climate vulnerability is a real thing, and we have over 120 million people at risk of falling into poverty because of the effects of climate change, which are being felt the most in emerging markets. So it's sort of these realities are sort of what led us to launch the Crypto for Good Fund. And with the Crypto for Good Fund, our aim is to close the hype gap in Web3. And we basically do this in 2 ways. So one is we partner with different startups to launch pilots that are testing out real-world use cases of Web3. And 2 is we share all the findings that come out of these pilots publicly. You can access all the reports on our website, which have all the key learnings and insights that come out of these pilots. And then a quick overview of where we are today. We've launched over 15 pilots to date. And these pilots are running across 10 countries in Africa, Latin America, as well as South Asia. And cumulatively, our pilots have reached a total of more than 40,000 participants. And we've deployed over $2 million across these pilots. So just want to quickly share with you a few of the learnings that we've seen coming from reviewing, so many different applications and also seeing the pilots that have been running as part of a Crypto for Good Fund. So we've had over 3 rounds of the Crypto for Good Fund so far, and we've received more than 500 applications, and across this pool, a few patterns have emerged. One is that the Web3 space is still nascent in emerging markets. About only 30% of the startups applying for the Crypto for Good Fund have actually completed a formal fundraising round. So many of these companies are at the pre-seed stage. And then the second interesting, promising finding is that many of these startups are actually targeting builders, actually targeting user groups which are underserved. And from our statistics, we see that the most popular segments are smallholder farmers, low-income people, as well as MSMEs. So now I'd like to provide a quick overview of some of the high impact pilots that we've seen out of the Crypto for Good Fund and provide you a deep dive on 3 of these pilots. So these are a few of the pilots that we've run, and as you can see, they span a variety of sectors and geographies, and they serve a wide range of user groups, all the way from low-income users to smallholder farmers. For instance, we run a pilot to provide smart contract weather insurance for 12,000 farmers in Kenya, and this was in partnership with Eka Africa and Etherisk, and we'll do a deep dive on this shortly. We also ran a pilot in Cameroon, which tested the use of tokenization and fractionalization of government bonds to make savings more accessible to low-income users. Another example I'll highlight from this list is the pilot that we ran to provide anticipatory cash transfers to pastoralists in Kenya, and we'll dive into this shortly as well. And then we also ran a pilot that leveraged NFT sales to source liquidity to provide affordable climate housing to more than 30 families in Mozambique. So these are some of the examples of, Web3 in the real world that we've seen as part of the Crypto for Good Fund. And, if you're curious to learn more, I'll invite you to visit our website where you can read more about the pilots, about the hypotheses we're looking to test, and the key learnings that came out of these. But for now, I'll provide a quick deep dive on a few of these pilots. The first one I'll start with is a pilot that we run in Cameroon. And we did this pilot in partnership with a startup called Ijara. Ijara is a financial technology app which is designed for users in Francophone Africa, offering a range of investment and saving services, including the ability to purchase a variety of cryptocurrencies. So for many of the users that are using this app, it's more like a crypto exchange. And this pilot reached over 11,000 users. I would like to provide a quick overview of the context in Cameroon just to give you an idea of the market need. So in many African countries, government bonds are probably the best savings product with regards to high yield, low risk. But the minimum amount to purchase a government bond is about $1,500 US. This is out of reach for many low-income people. And so the idea of this pilot was to take the idea of tokenization and fractionalization of government bonds. You bring these bonds on chain, and you're able to fractionalize them, and then people can access this product for as little as $1.5 US. So Ijara was able to cut down the cost to the minimum amount to purchase a government bond by 1,000x. And that was the key hypothesis of this pilot. I'll quickly share a bit about the key findings that came out of this pilot. So one, the pilot enabled access to a high-yield, low-risk savings product for many who didn't have prior access. So out of the users surveyed, 46% of the pilot participants say that they hadn't been able to access such a product before. So that sort of gives you a sense of, the power of lowering costs and how that impacts financial inclusion. And then the second key finding from this pilot was that it actually helped to improve the financial discipline, planning, and overall savings experience for users who saved more than once on the app. So more than 2/3, about 66% of the surveyed users reported that they saw improvements in their financial discipline and planning. And on this slide, you can see a quote from one of the pilot participants, mentioning how this is giving them access to a service that previously they couldn't access, and this is helping them build financial independence. Another pilot that I would like to highlight from the Crypto for Good Fund is one that we run in Kenya. And I guess a little context about the market need here. So we have over 50 million pastoralists in sub-Saharan Africa, and they basically rely on pastoralism for their livelihoods. but the effects of climate change are threatening their way of life. We've seen more prolonged droughts more recently in the Eastern Horn of Africa. And at the same time, today, 99% of humanitarian aid is delivered reactively. That means it's delivered after the disaster happens, after the worst effects have been felt. However, research shows that many of the humanitarian crises in the world, more than 50%, are actually somewhat predictable. And so, bringing these two ideas together, the hypothesis of this pilot was, can we use on-chain remote sensing together with smart contracts to increase the speed of delivery and reduce the costs of humanitarian aid? And so, yeah, we ran this pilot in Kenya, and these were the results that we found. We found that using smart contracts resulted in a 75% reduction in the transaction costs compared to traditional cash transfers. So the end-to-end cost, including gas fees, was about 2.5%. And this, comparing this with traditional methods, which typically take between 10 to 35%, depending on which country the funds are moving across. And this includes also the operational costs involved in moving the funds from the donor to the final recipient. And then the second key insight from this pilot was that it resulted in a 90% reduction in the time for the delivery of funds from release to the beneficiary. So typical cash transfer methods take between 7 to 10 days. With this pilot, we were able to cut down that time to just a few hours. And as you can see here, one of the pilot participants says, before participating in the program, we had previously slept for 2 days without food. On receipt of funds, I went and bought food for my family. That sort of gives you a sense of, the impact of drought on these pastoralists. The final deep dive that I would like to cover is a pilot that we also ran in Kenya, which was focused on providing a smart contract-based weather insurance product for smallholder farmers. I guess quickly providing some context around this, today in sub-Saharan Africa, only about 3% of smallholder farmers have access to crop insurance. Globally, this number is around 20%. And this leaves farmers vulnerable to the impacts of climate shocks. So we partnered with a startup called Eka Africa, which is an index insurance service provider based in Kenya. And they cover about 1.7 million smallholders across East Africa. And through this pilot, for the first time, we integrated blockchain smart contracts into an existing weather index product at scale. And so in the event of an extreme weather event, the policies are automatically triggered, facilitating fair, transparent, and timely payouts to smallholder farmers. And some of the barriers to adoption for such insurance products in emerging markets include the high premium costs and the complex claim settlement processes. And so the key hypothesis for this pilot was, can Eka Africa, the startup providing this product, can they use smart contracts to automate their already existing insurance payouts and minimize the operational overhead, providing greater savings to their clients? And looking at the results that came out of this pilot, so the two key findings were that smart contract integration into the weather index product drastically reduced the payout times. So by automating the product using smart contracts, the pilot reduced the payout times by 97%, from an industry average of about 45 days to just 24 hours. And then the second key finding we saw was that smart contract automation enabled an increase in the coverage amount. So Eka Africa actually reassigned 3 actuarial staff to other roles within the company, which helped them save costs. And they basically pass these on to their customers by increasing the coverage amount of the policies. And you can see one of the quotes from a pilot participant, highlighting the impact of this pilot. He says, "I now have less stress about how the weather will affect my produce each season because I know the company has me covered." So this sort of gives you a sense of, these were just a few examples of some of the pilots that we've run in emerging markets. And the idea was to sort of highlight some of the real world Web3 use cases that we've seen in emerging markets. Yeah, and so with that, happy to open it up for questions. I'll just mention that the Crypto for Good Fund, the 4th iteration of the fund is now live. And we're receiving applications up until December 20th. And we provide grants to startups that are building Web3 solutions in emerging markets. We provide up to 100,000 to each startup. And so if you're interested, I'll encourage you to scan this QR code to apply. Yeah, with that, happy to take any questions.
Thank you so much, Timothy. 2 QR codes on screen. Great, awesome. Thank you so much for that amazing talk. The QR code is on screen here. Please take a photo of it so that you can ask some questions. Basically, once you get to the screen, you just need to scroll all the way to the bottom right, and there's a live Q&A button for you, and you can submit some questions. So let's go ahead and get started here. The first question, Timothy says, you mentioned Web3 hype has not matched reality. Making money, as I think all of us know, is a big incentive in the space. Do you have any ideas on what can incentivize better participation?
Yeah, so that's definitely right. Yeah, a lot of crypto space is really about graph go up, and so I think one of the things we've seen that actually incentivizes people to come into this space is some of the success stories that we see, right? So, for instance, when you prove that crypto actually is able to lower the costs, is able to lower the barriers to access, and even someone who wants to make profit understands that by being able to broaden the user base, then you're able to build a much bigger business. So I think from our perspective, the way that we sort of encourage more profit-seeking people to take an interest in this space is just showing them, the scale that's available to tap in. There's so many people who don't have access to savings products. There's so much, there are billions of dollars of funds in humanitarian aid that are moving across the world. And so if you're able to make that process more efficient, reduce it from 20% to 5%, you can make a markup of 2%, which is a decent amount of money. So that's, that would be my perspective on that question.
Thank you so much. So we'll move on to the next question. Do you have insights on what it takes for a promising pilot to make systemic change?
Right. Yeah, so, obviously, creating systemic change is a multi-year process. But I think, what we've seen is it's sort of baby little steps that sort of, in the grand scheme of things, tend to make a sizable impact. So, for instance, the pilot that we ran with Ijara in Cameroon was tokenizing government bonds. And, like you might have had in many African markets, the regulators either don't really get crypto, or in some markets, they're actually hostile to crypto. But what we saw happening in Cameroon was that Ijara was getting government bonds and putting them on chain, and then the government realized that, wait a minute, this could actually help us sell more bonds. And so the central bank is actually keen to sort of work with Ijara to, find ways to help them sell more government bonds. What's interesting, though, is that it's not, the central bank is not the one that regulates, the crypto space, but I guess it's sort of like it gives them a way into, to influence government officials. If you have a few people who actually see the benefits that this solution can provide, then that sort of gives you a bit of buy-in when you're going to talk to other regulators. And so, from my perspective, I think that's sort of one of the ways that you can see systemic change. I think another way is just around lowering costs. So for instance, one of the use cases that has been proven at this point is the use of stablecoins to lower transaction fees across borders. And, systemically, what this enables is all of a sudden, an African merchant can purchase products, from a supplier abroad, and, because of the lower fees, then they have more working capital. So if you're gonna reduce the delivery time by just a few days, all of a sudden, those few days actually translate into a significant increase in their working capital, which allows them to scale their business even more. Yeah, that would be my perspective on that question.
Great, thank you. The next one up is, what have been some of the challenges you've had to overcome to operationalize these pilots?
Yeah, so I think, one of the obvious challenges, given the demographic, for many of these pilots, we're working with smallholder farmers, low-income populations. And so naturally, when it comes to things like smartphone adoption, they're probably going to have a low smartphone adoption rate than people in urban areas. And so for many of these pilots, we had to either, work around that, in some instances, you could have someone in a community that has a wallet that is sort of receiving funds on behalf of users. In some instances, in some markets, some startups have come up with USSD-based wallets. So these are able to work on feature phones. Yeah, but by and large, there's also a huge component of user education. Many people have no idea about how Web3 works. And so, one key component across any pilot is you have to spend a couple of days just, training people about the benefits. In some instances, the crypto is running in the background, and, you don't have to talk much about the technical stuff, and you just have to tell them about the actual benefits to their lives. Yeah, but I would say, by and large, the key challenge is always around what devices do the pilot participants have, and how are you going to work around that and make the pilot successful?
Great. We're moving on to our next question. We've got a couple minutes left. You mentioned many finance-focused use cases. What are your thoughts on deep-in use cases such as cellular networks?
Right. Yeah, so that's right. I think we've seen a few deep-in use cases as part of our applications. I think, the challenge with deep-in is always, how do you kickstart the network? And how do you get, a few people to buy in and sort of be like the pioneers to stand up a deep-in network? But I guess one example I'll highlight, which is a pilot that we actually have launching soon, is with a startup called Liquid Star. And they've sort of figured out a way to design micro data centers operating within the size of a shipping container. And these are powered by solar, and they're also using Starlink for internet. The price point is still a bit high, but I think it's one promising use case that we've seen. And yeah, I think the key challenge with deep-in is how do you bring down the entry cost down just to a point where it's easily accessible by a wide range of people, and at the same time it makes business sense for someone to be part of the network.
We've got just over a minute left. What DeFi savings products have you seen being used, if any?
What DeFi savings products have you seen? Yeah, not sure if I fully understand that, but what we saw with the Jara pilot was, by tokenizing the government bonds, then they were able to offer this as a savings product to their users, enabling them access to a high yield, low risk product that they previously didn't have access to. So that's one example of a DeFi savings product.
Great. And one last question. Are there specific challenges that builders are facing? Builders have come to you to talk about these challenges maybe when they're creating solutions for some of these use cases.
Yeah, like I mentioned, one challenge is around devices and wallets. I think, obviously, I can't fail to mention the regulatory challenges. In many African markets, you have startups are operating in a legal gray area, so many of them find that they have to incorporate their startup, in some other country, but then they're operating locally. And also, sometimes it's also hard just to pitch to investors and sort of convince them to overcome that regulatory risk when it comes to fundraising.
Great, so that was the last question. Thank you so much. Can we give Timothy a round of applause?